Welcome to this Phoenix Blue morning update on Monday the 16th of January, presented this morning by Tom Colley. Okay, we've got a busier week news-wise coming ahead after a very quiet week last week. We've already had some reaction to a forthcoming news event, so let's go straight over to the news and have a look what we've got. Well, worth mentioning today, in the US, we've got the Martin Luther King bank holiday, so we can expect reduced liquidity through the US session this afternoon, so please be aware of that. The only other actual thing on the calendar for today is a speech by the Bank of England Governor Carney at 6:30 p.m. UK time. The item of news that is further forward in the week is tomorrow. We haven't got a specific time on this at the moment, but UK Prime Minister May is due to speak, and the press have openly stated, and there's been nothing to suggest that this isn't going to be the case, that the UK government has decided and will announce that it intends to leave the European single market when it negotiates its Brexit position following the issue of Article 50 before the end of this quarter. Now, that's the first time that the UK government have confirmed anything like this. At the same time, the Chancellor of the Exchequer, Philip Hammond, gave an interview on German television, which suggested that, or where he stated that the UK would do whatever it was required to maintain its competitiveness of its economy after the Brexit. The press and certainly the Dutch government took this to mean that a tough negotiating position from the UK in respect of the UK potentially becoming a low corporation tax area within Europe but outside the EU, in order to maintain its competitiveness if it doesn't have the direct tariff-free access to the European markets. So undoubtedly what has been termed or is being termed these days, we're heading towards a hard Brexit in the eyes of the UK government. This is the first time they've come out with anything specific ahead of the issue of that Article 50 and the beginning of the actual negotiations. We'll see when we look at the GBP chart shortly. The market's gapped at the open, all the cross pairs have gapped at the open, based on that news, which basically came out yesterday. And there was also even a comment in the Sunday Times that staff in number 10 were anticipating a further correction on the pound. So they clearly are making this announcement on the basis that they accept that it will further pressure the downside on the pound. Other major news this week is we've got rate announcements from the Bank of Canada and the European Central Bank later in the week, and a number of other items that we'll bring to you on a daily basis, which are going to make this a busier week. Over to the charts, the dollar index, well, we bounced on this level at about 100.60 on Thursday last week. Friday was I had a bullish day until we had a bearish move into the close on Friday, which did give us some concern that the bearish side of this market would continue, the dollar weakness would continue. That hasn't so far been seen this morning. As you can see, we've opened around Friday's open, so we'll be watching this market very carefully, because a lot of what happens in the other majors and minors is dependent upon this. We've got this level at 100.60, but also this key level of $100. As I've said before, we'll remain bullish on on dollar strength as long as we don't get a close below that $100 level. Over on the yen, well, again, it's all about where we're going to correct on the dollar from. We're looking to coordinate the appropriate level with levels in these markets. We will be cautious how we enter markets this week. We predominantly won't be entering with limit orders. We'll be looking for changes in cyclicity matched between the dollar and corresponding major pairs. Over on the euro, same thing applies. We can see we've got an area here where there's a little bit of uncertainty. Obviously, this just reflects the dollar index. We've had price rejecting a level up here. As you can see, I've got an order in at a higher level through here, which would require the dollar to weaken further. Here we are. This is the GBPUSD chart. As you can see, we gap significantly at the open here. We're still above the should we call it the Brexit lows or the post-Brexit lows over here. When I was looking at an intraday chart, we're basically in a box range at the moment here. Will the market come back, close this gap? Will it wait for Prime Minister May to speak on Tuesday? That's something that we'll be watching. But what does concern, we need to be cautious because we've got this gap here. Certainly on an intraday basis, if there's sign of that gap closing, that may be something we decide to take to the long side just on a short-term basis. Over on the Aussie, we're actually short the Aussie at the moment. We got in here about 7,500, which is the bottom of the box range. If you can just see this hashed yellow square there. As I said, we got in there on Friday. We got quite bullish movements into the close on the Aussie, corresponding with the bearish closes in the dollar index. We were concerned that this market we were going to be taken out of this trade, but we've set off through last night and the early stages of today with a bearish movement in this market, down to, for looking for trades intraday to the downside, again very much based on the dollar index. Finally, a chart which is an interesting level, US dollar CAD. We've got this trend line through here. We've had a perfect retest of a break and a retest of this trend line at the end of last week. I'll be looking for a further retest of this, potentially to take that back to the downside if we see further dollar weakness. We also need to be aware of crude in this respect. Crude, there's a clear zone on crude around $150, $52. We'll be looking for crude to react on that and go back to the long side towards its recent highs again around $55. If it does that at the same time as we get the continued dollar weakness, we'll see opportunities to the downside on US dollar CAD, certainly in the shorter term. So really, that's it for today. As I said, bank holiday today, so a little bit quiet. We are a bit cautious, waiting to see what's going to happen. And we will be speaking to you every morning throughout the week as things develop. So trade cautiously. As always, protect your capital and have a good week. Thank you and goodbye.